Welcome back to another video. Today's going to be a fun one. We're going to be reviewing one of the free courses that are on YouTube from the 2022 ICT membership. A lot of people were excited about this, that he was offering this in the last year. And this is another guy that's been trading for, I think, like 30 years. He originally did options and Forex, and now he's looking also in the indices area. So what this guy makes sense. It's a bit like when I first found the Scruffy Trader, things just made sense.
Yeah, well, now it makes sense.
The way he was looking at the market, and I thought I'll give it a go because a lot of people are trading under the ICT sort of ideology of how the market works, and he's a very direct person. You know, there's one way the market works, and that is with time and price. He trades without anything on the graph, just literally the candles. And in the membership, he will put some lines up to show you where, obviously, more for the explanation for the person looking at the course to understand what he's talking about. But generally, all his trades are done on time first and then price. If you are an ICT trader, you will be very familiar with what I'm talking about. If you're not, you should go and check him out. So I thought it would be a cool little video if I tried myself. I can't talk about something if I haven't physically traded it. And this is something that goes super against my trading style, as I haven't traded intraday. Intraday, yes, but intra hour and 5-minute chart, and also the open. These are areas where I haven't touched in the past, but I thought I'll size down and give it a go and see what this guy, how he trades, because it made a lot of sense. So what I wanted to do is I found two trades on what he calls the value gap, and what it means by that. He trades a lot, and he talks a lot about on the membership around how algorithms work. And in order to find sort of how the algorithm is working, you have to go down to the lower time frames within, obviously, seconds, minutes. And you can get your ideas from the 15-minute and the daily to your bias, and his aim was to make it as simple as possible for him to give it to his daughter and trade it. And I think that comes across. And it's let's not talk. Let's look at the graphs of how I used it today. Obviously, I only looked at his first 8 lessons that he offers, and I grasped that idea, and I wanted to implement it into the market, and that's what you're going to see today. Today, if we go on to our trading view.
Oh my goodness, what a view!
So, what we've got here is the pound dollar, and you are going to see it there, but if I do it quickly enough, I might not give it away. Anyway, so I had 2 markets that I was looking at. I was also looking at the DAX on the open. This is the London Open, and what ICT suggests is to start drawing these lines of where the kill zone is.
The first 3 hours of any abduction is what they call the kill zone.
So where you're going to be looking at to enter. These are obviously scalps, and you can hold it on for the sort of open duration, which he deems to be from 7 from the pre-market to 10 o'clock is prime time, and he calls it the hunt.
Is back in the ocean. Happy hunting.
As in, you're hunting for that specific setup that you can repeat day in, day out to get your 10, 30 and even more pips. People where he has shown on his membership how he can get a lot more pips during this method. So what I did, I went back to my drawing, and I went back to 7 o'clock, and then that I traded that up to, I believe it was 10 o'clock. And what I was looking for is what he calls a value gap. I might be getting the terminology wrong, but hopefully not too bad. So the value gap, what he's talking about is the algorithm works by chasing stops, and chasing stops from retail traders. And what that does, it goes from a high swing to a swing low, and it will take the traders, retail traders out, and then it will go the direction that the bias, where the big money, institutional money, is pushing the market to go to. So what we'll do is start with the 15-minute and the open. If I bring the drawing thing, I think it's going to be easier. So that's the start of the day. This is 12 o'clock this morning, and you would go back to the pre-market and the open, and then you will start putting in the high, the immediate high, swing high, and the immediate swing low of before the open. Okay, so this information, I could do this actually just to hide that. What I was seeing at the time was this. So you would take that swing high and swing low. I adjusted this line later in the day, but you would say the immediate swing low on the current price is here, and the immediate swing high, it's here and here. All right. This is a bit of this is the actual swing high, so you would put that sort of there. But as you go down the time frame, so like a 2-minute, you can see there's a consolidation there with a lot of touches. So retails would say that this is sort of resistance. So what we'll do is put the swing low on the swing high, and then if I go down, I haven't done this for a while, that would give me one candle. Okay, so that's playing one candle at a time. You start hunting for this setup, which you're looking basically for the break of the structure, and within the break of the structure, you're looking for that gap where price has been either overbought without sellers. So the algorithm will want to bring in the sellers because they don't want to have an area where there's so much buying but not selling. You need buyers and sellers in every situation. So as we go down the line here, you're constantly hunting for the setup that I'll show you. And as you can see here, that high got broke. Be clearer on the 2-minute. We had that swing high. That's why the line was adjusted. That swing high and that swing low. During the open, that swing low didn't break on the pound dollar. And before this, it's worth saying that you need to have your bias. And the bias, literally, you can go onto your pound dollar very easily. And he suggested doing your balance on the day, but this is something that I saw at the time. Strong buy, 12 indicators of moving averages. This is not in ICT membership. He doesn't like moving averages and any lines. He does it from the price. But this is something that I'm used to from my trading. So this was showing strong buy on the moving averages, and the summary was also buy. Oscillators were neutral. Good indicator that the moving averages are looking long. And then if you go to your daily and you look at the picture, we are on an uptrend, and we are hitting. So that is another area where you can determine that this is your bias can be long. And as you can see here, we're coming across that retail resistance that ICT will be calling. And this is area where you want to, the algorithm will want to be taking out buy stops and sell stops to reverse the price before it moves to the direction that it wants to go. So if we go back to our trade, So what did I see here from ICT's teachings that gave me a valid entry? So if I go down, I believe I saw it on the 3 minute, and you zoom in on this, you can see we had a break of structure. And also, that's one rule. You need a break of structure to the upside or the downside if you're going short. So we're looking for longs. We've got our bias that is long. And we also need a fair value gap, which is this candle here, for instance, has gone all the way up, but the price hasn't covered the wick of the previous candle. So there is, let me make this clearer. There is a value gap that the market, the algorithm, will want to fill before it goes in the direction that it wants to go, hunting for more swing highs like you see there. So that would be one entry. I believe the reason I had it lower might have been because I was doing it on the 5 minute. So as you can see here, the 5 minute, you've got a bigger value gap area. So as soon as you see this, I saw basically, yes, let's do that. Let's do replay again. So I saw the third candle. So you want to see the break candle, the follow through candle, and then you are waiting for that candle to retrace back to cover this area. It's a bit like gaps. When you see an open gap, the market wants to come and fill the gap. This is the same sort of ideology, that it's filling orders that are buyers, but there's no sellers. And so if we go forward, I got a fill there. He suggests that you can fill on the top here, or you can fill on the bottom, or anywhere in between, depending on how far you can take your stop. And my stop was, I was trading a small, so 0.2 or £2 per pip. And my stop was down below these swing lows. And as you can see, I got tagged in. And I had to sit here through a bit of heat, as it's something new that you're doing, but I'm used to sitting in, building up trades when it's going against me from the scruffy trader and what he calls madness. That's my main way of trading, and I would definitely recommend going and watching his logic around trading. Is one of the best traders I know. So following with ICT, he also talks about this. Don't get scared when this happens. The market will come and retest this area. Excuse me, to build up the liquidity needed to go on the upside in this case. So as it comes down and back again, and I get a second fill here. So I had two positions on this. And little did you know, after that, it went skyrocketed to the top. I took, I believe, 20 pips. That's the wrong one. Let's do a measuring tool. So my entry was there. That move here is 25 pips. I took it up to that swing high there. So you could take it off that swing high. You could take it off that swing high. You can also look on the left side and see what's happening. And that swing high there. These are areas that the algorithm will be pushing towards taking out stops, buy stops. So that was one trade. And let me just see if I can show you that in the actual trades. So that was that. I got 10 pips, nearly 10 pips, and then including this, let's say 25 pips or so with this trade. And I replicated that on my prop firm on the fivers, and I had this pound. I had a few more positions on that building up, so 119 pounds from 0.2. And the other trade that I took was the same scenario on the euro dollar. and went up to the open. That's 8 o'clock there. I hadn't seen a set. The rules that is very specific that you have to follow. I did. Let's see, where did I see it? That's annoying. It's there. Okay. So we had this swing high and swing low on the left side of the chart. If we draw this, so we had this high there, and I believe this is the open, is it? No, let's go further back. This was the open, 8 o'clock. So the swing high would be this one, and the immediate swing low to your left would be this one here on the 2 minutes chart. On the 5 minutes, sorry, we have to do this on the 15 minutes when you're doing the charts analysis before you drop down to the lower time frames. But make sure I've only seen 8 lectures of his very quickly in a few days, and I just picked up the idea for video content and see and actually trade it in real life and see if it works, because that's what he suggests to do. So as you can see, that was the swing high, 8 o'clock. Yeah, that's correct. So 15-minute swing high, swing low. We needed to see a break of this formation, and within that break of the formation, as you can see, we didn't have a value gap area. You go down the time frames. You go down to 5, 4, all the way to 2 minutes and 1 minute. And on the 2 minutes, you'll see that after this structure was broken, there was a value area. So this structure here broke. We had the strong break here. If I put a line to demonstrate that break there, and if I move that out of the way, you'll see that again we have from this wick to that candle there, we don't have a retracement candle to bring in the sellers. So there was a gap area value that I was looking for, and I put my buy. I was waiting for the market to come to retest, fill this, and I got an enter there. And I entered also on this swing low here. I was going to enter on this swing low as well, as I'm used to moving backwards into trades. And my stops were below this high low. So if that went down all the way down here, I would have killed the trade with, I believe, $50 loss. So I got triggered there, and off it went. And this is the crazy thing, that if I had let it, obviously hence size, you can say this, but this move, I think, you got 40 pips there, and that 2 minute candle. Let's see. Oh, sorry. And let's go to, so that was a 40 pip move. So I got a 20 pip or 10 pips, I think, on the euro dollar from that trade. I only traded it once, and it was pretty clean. And this was on 2 trades on here, 10 pips each of 0.2. It was quite clean. It was quite. I thought it would be very stressful on the 1 minute and 2 minutes, but when you have your stops in and you know that your maximum loss is going to be £50 or £100, that you can just let the trade play out. And it was more educational for me rather than make a lot of money on this trade, but it actually worked out to hit my 10 to 20 pips a day. And will I do it again? I think I will give it a go. I kind of like the process of learning something new, and I'm definitely gonna watch all these videos on the membership because it just makes sense what he's saying. In terms of algorithmic trading, I do know someone who does this for a living, and he doesn't touch the screens, so computers are doing all this, chasing stops and buy stops and sell stops.
They decided to just let humans turn themselves into robots.
So it does make sense. I would definitely recommend going and seeing him. The other trader that I would definitely recommend watching is the Scruffy Trader, because he also makes a lot of sense to me. And that's it. That's for the 2 live trades that I did this morning. I hope you found this useful, and all the ICT traders out there, sorry if I have used some wrong terminology. I literally picked up this idea for 2 days. So don't kill me on if I haven't done this right, or, well, if I haven't done it right, please show me how you do things, because I would like to improve my trading. Anyway, I hope you enjoyed this video, and I will catch you on the next one.